Precision scalping strategy is a powerful and versatile scalping strategy that is designed to enhance your profitability when trading various financial assets. So whether you enjoy trading forex pairs, you enjoy trading commodities like gold, derivative synthetic indices, or you also enjoy trading cryptocurrency, this is the strategy for you. If you're watching us for the first time, make sure you don't forget to subscribe, like, and comment on this video. My name is DC, and today I'm going to be presenting one of the most powerful scalping strategy that can be used in most financial assets. So let's quickly look at how we are going to install the indicators on this 5 platform. So let me quickly delete everything so that we can have the same thing. So here my chart is blank. There's nothing on my chart. I'm going to add the chart. So I'm going to start with the indicators. So the first indicator that I'm going to make use of is a moving average, and it will have a period of 2,400. Shift 0 method exponential, apply to close. Then the star is going to be 4 pixel with the color line. So you're going to click save, and we now have our first indicator, which is this line that you see, the line that you see on your chart. So this line is there to show us our long-term trend. This strategy is a trend following strategy. So we have a long-term trend filter. Then secondly, we are going to add a short-term trend filter, which is going to be our 200 exponential moving average with the color. It's going to have a color red. So we're going to save. So we have two trend filters, one for short term, the other one is for long term. Then we're going to add two more indicators. The first one is going to be our oscillator. It's going to be a stochastic oscillator. We're going to have a stochastic oscillator with change a little bit the settings. So the default settings will be, it will look like this. It will have a percentage K period of 5, percentage D period of 3, slowing. It will have 3. Then price field, it will have low over a high. Then the method is simple. We're only going to change on the style. On the style, we're going to change and put the color black, the color of your background on the main. Then the signal remains as it is, or you can also add make it 4 pixels so that it's more visible on the chart. Then you click save. If you go back to the chart, we now have this stochastic oscillator with those levels, with level 80 and level 20. Then we are going to go on the main chart again. We're now going to go on oscillators. Under oscillators, we also want the average true range. The average true range is there to show us our dynamic support stop loss, our dynamic stop loss. Then we're just going to make use of the default settings. Then we click save. Then once you have this, you now have the strategy. So let me quickly explain how this strategy works. But before we embark on that, let me quickly introduce some of the services that we offer on this channel. We have our copy trading services, where your account is automatically connected to our account, and the trades that we execute in our account will automatically be executed in your account. So we also have copy trading services. If you're interested, just write in the description, and if you also go on the description, there is my WhatsApp number. You can also get in touch with me on more information about copy trading. Then we also have our mentorship lessons for if you are a beginner trader, or maybe you've been trading but you've not been that successful. We also have a mentorship classes where we teach you how to trade using price. So our mentorship program focuses on price action. We are mainly focused on price action. We also teach you how to use support and resistance, how to trade fake outs and breakouts, trend line, support and resistance, how to draw trend lines, how to draw support and resistance, candlestick patterns and chart patterns. We'll also be teaching you trading psychology, risk management, and we also be teaching you how you can use demand and supply trading. So basically, that's what our mentorship focuses on. But we also have a mentorship for if you want to be a programmer, you want to make your own indicators and EAs. We have a mentorship class for that. Then we also have our VIP signal services, where we provide cryptocurrency, gold, and derived synthetic indices signals. So if you're interested, just get in touch with me and you can get these services. Then we also have um, our EAs and indicators. We have a lot of indicators for trading various assets, and we have a lot of EAs. Get in touch with me if you're interested in these financial tools that we have. Okay, so let's quickly look at then on this particular videos. If you go on the description, I've inserted different links which you can make use of and visit MKO5, and you can get access to these tools that we are talking about. And on this particular video, again, we have a PDF. If you're interested in the PDF for this particular strategy, we have a PDF. I will show you at the end of this video a PDF. You can also get access to this PDF by just making sure that you like, you subscribe, and you comment. You just comment PDF, and I will send you the PDF for free without paying any amount. Then we also have our WhatsApp group and Telegram group for updates, and if you're interested in some signals. We have a specific group for signals. I don't send signals every day in these free groups, so you can also join there. Sometimes I send signals, but in most cases I'll be sending updates and some free trading tools. There are times where I send robots, there are times where I send indicators for free, and there are times that I also send some trading knowledge for free. Okay, so let's talk about how we are going to be buying and selling using this particular strategy. So like what I highlighted, it can be used for different various financial assets. So for the conditions for buying, let's talk about the buying. So the first condition is this: if you are going to be looking for buying opportunity, you are going to check first the line, this one. Your candles have to be above this. So that's the first condition. Then the second condition, the candles again have to be above this red moving average, this red line. That's when you start looking for entries. So those are the first conditions for buy. The candles or the prices to be above the 2400 and the 200 exponential moving average. So that's the first condition. Then for entries, we're going to make use of the stochastic, the main the signal line of the stochastic. So what we want the stochastic to do is this: it has to cross above the 20, then we get an entry. As simple as that. So when you now have the first condition have been met for your entry, if you're going to be buying, wait for the stochastics to cross above the 20, then you get an entry. Okay, let's look for an example. For example, at this particular level here, if we check here on our stochastic, it crossed above 20. We're going to get an entry around this particular entry. So with this strategy, in most cases, you're not going to get a drawdown. The moment that price crosses above the what, the 20, you know that you'll be in a position to be in that particular market for a very long time. So it gives you this sniper precision entries. That's the good part of this particular strategy. Again, here you can see price crossed above the 20, while it's all the lines, the price was above all these lines, and we're going to get an entry right around this particular entry. Then for a strategy to be complete, we've talked about the entry. We need to also talk about how we're going to set our stop loss and our take profit. So for the stop loss, we're going to make use of the ATR. So there are two ways that we are going to be setting our stop loss. The first one will be using dynamic stop loss, where we'll make use of the average true range, which basically measures volatility. So different markets have different volatility, so we'll make use of the ATR. And here, where we are going to be getting an entry, I have a separate video where I'll teach you how to use the ATR to set your stop loss and your take profit. So in this particular example, it's going to be simple here. This is where I want to enter. I will check here at this particular level here where we had an entry. It was roughly right around here 1.6, 1.7, 1.16. So it's the value of the ATR times 2. Then you subtract it, since you'll be buying, you subtract it from where you're going to be entering your trade. For example, we're going to get an entry around here. This was our entry price. Then we're going to subtract those pips. So roughly it was going to be roughly 1.9 1 point, let me check here. This is the candle that went up, so we're going to end around here. Then it was going to be 2670. Then we're going to subtract the value of the ATR here to get our stop loss. Or you can make use of a fixed stop loss. You can make use of a fixed stop loss. For example, if you're going to be using this strategy on 5-minute time frame, you'll be using 5 pips as your stop loss. 5 pips as your stop loss. Then if you're using it on the 50-minute time frame, you can use 10 pips. So it differs with the account sizes and your risk tolerance. So you can make use of 5 to 10 pips as your stop loss if you're going to be using a fixed stop loss. Then for your take profit, it becomes easy. It's now we're going to be maintaining a 1:2 risk to reward ratio. So that means if my stop loss was 10 pips, or let's just say 5 pips, that means my take profit has to be 10 pips. As simple as this. If it was 10 pips, the stop loss, the take profit is going to be 20. We'll be maintaining a 1:2 risk to reward ratio. As simple as that. So basically that's how we set our stop loss and our take profit. So basically that's how easy this strategy is. So let's look for a selling example. Then okay, here we can see our price is trading below this line. We have the lime green line and also this red line. Then we are going to go on the main on the stochastic, and we want the stochastic to cross below the 80, like what happened here. So here at this particular level here, we're going to make use we're going to get an entry here. So our entry was roughly around this area. We're going to get an entry here, and our stop loss was just going to be 5 pips. So we're going to get an entry here around here, which was 26.36. Then you add 5 pips, roughly around 41, somewhere here. You're going to get your stop loss here, and your take profit was going to be at 36. We're going to add 10, so that means at 26, you're going to get your take profit somewhere around here. A 1:2, it was 36. Then we add. So here we're going to get an entry around here, and at 38. So that means here it was supposed to be 38. Okay, so 38 will be around 28 will be the TP around here. You exit the market. This movement will be your take profit. So like what I said, let's look at an example in so this was in gold. Let's look at an example in Euro USD. Let's quickly look at an example in Euro USD. Euro USD. Okay, we're now on Euro USD. So we're looking for a buying opportunity. We're looking for a buying opportunity. For example, here we had a perfect example. You see, all the candles are above this. The candles are above the 2 lines, and here we had the crossing above the 20 around here. Then we're going to get an entry. Stop loss, it depends with your risk tolerance, or you can make use of the ATR. Then we're going to get an entry here, and we're going to exit around this swing low. So you can make use of swing low and swing high to set your stop loss and target profit, but it's a very powerful. You can see after this, price kept on moving upwards. Let's look for a selling example. Then we'll look at an example in derived synthetic indices. Then we will be done. Okay, here the lines are below. Yes, the lines, the price is below all these lines. You see the limelight, the lime green and the red line. So here this is perfect. We're going to get an entry around this particular area here. Here this is where we had a crossing, and then price pushed a little bit up and then started to drop. You're going to set your stop loss. It depends with your risk tolerance, but you can see eventually price then dropped. We're going to definitely hit our take profit at this particular level here. So this is an example. Let's look at VIX 75, which is very common in derivative synthetic indices, which is one of my favorite indices that I want to trade, that I enjoy trading in derivative synthetic indices. Okay, here, okay, price is below, and here we're going to get an entry around here. You can see price dropped and it crossed below the 80 line, and then after that price then kept on moving downwards. So it's a scalping strategy. You're just gonna be there in the market for a few minutes, then you exit. Let's look for a buying opportunity in VIX 75. VIX 75, buying. It has been selling for a very long time, so I think it's gonna be a little bit difficult to find a good. Okay, here we have good buying opportunities. Okay, you can see here price is above these lines. These are the lines, and we can see the candles are above these lines. You see the candles are above. Then we're waiting for price to cross above the 20 line right around here, and it is to be above the line. So here we're going to get an entry here, and then we're going to hold the price, maintaining our 2:1 risk to reward ratio. So basically this is how this strategy works. If you have any questions, feel free to ask in the description. Thank you so much. We're gonna be doing some live demonstrations so that most of you guys can understand how this strategy works. So what I did is this: I'm in the process of making a trading robot based on this particular strategy. But if you visit MQ5, there's a description. In the description, there is a link to MQ5 where you can get the indicator. The indicator is there. You can just click on the link in the description to get access to this indicator. It's now there on MQ5. Thank you so much, guys, for your time. Enjoy your day. It's bye bye for now.